So first of all, Colin, you guys actually got a team of engineers to break down the entire car. Tell me about the process here.
Yeah, I mean, it was a very exciting process. We partnered here with a team we call the Evidence Lab, a bunch of data scientists, and we've talked to them about how the Chevy Bolt will be the first mass market EV with over 200-mile range, and this would be a very interesting test for EVs in the U.S. and globally. Since this was such an important vehicle, we decided to partner with a company that is an expert in automotive teardowns and provided us a very detailed cost analysis of the entire EV powertrain, which I think gives us quite a unique edge in understanding this important phenomenon in the industry.
So give us the highlights on how the Bolt compares to the Tesla Model 3.
Well, I mean, we'll get the full details of the Model 3, but both are around the similar price point, actually. I mean, the base Tesla Model 3 will be $35,000. The Bolt with base would be more like, once you get the $7,500 credit, it's about $30,000. So similar price points. The range will be very similar. Both will be over 200 miles. So they're very interesting comparisons. Now, obviously, Tesla is going to be a little bit more upscale. So when we compare the two, we put a little more cost in the powertrain, assume that they're going to have a little bit nicer interior. Given the price point, probably is going to be more like 42, 43 with all the options, which will be closer to sort of a BMW 3 Series.
Now, you guys estimate that GM is losing $7,400 on every car. There are estimates that Tesla will be losing $2,800 on every Model 3. How do they stem these losses? How do they close that gap?
Well, I mean, the big driver here is going to be battery costs. So that's today. Also realize that we're only assuming that GM is going to sell around 30,000 Bolts a year. That's a very low number, so the R&D costs aren't really spread off over a lot of units. But the big driver going forward is going to be that their battery costs are going from over $200 per kilowatt hour today, and we estimate it'll be around $130 per kilowatt hour. So there's massive declines in battery costs are a key driver. We also assume there's certain components, and that was part of our expert analysis, that have a good step function coming down on the EV powertrain. That will also help in an above average cost decline on the EV powertrain as well. So that narrows the gap from about a $9,000 cost premium today to just a $3,000 or $4,000 premium by 2025. When you contribute that to the total cost of ownership, lower fuel, hopefully lower maintenance, the economics, particularly in Europe where gas prices are a lot higher, actually start to make a lot of sense.
So what is your projection for the growth in the EV market in general as a result of the Bolt?
Yeah, I mean, we raised our global forecasts because we did find that the costs today are lower than we expected, and we do expect battery costs to accelerate. And that's, with, a lot of experts that we've talked to around the battery. So we're expecting by 2025 about 14% of vehicles globally will be EVs. So it's a very high number, I think, compared to other estimates out there. A lot of that will be driven by Europe, with about 30% penetration in Europe. In the U.S., we're a bit more conservative. We expect only 5% EV penetration. We really look at it with much lower gas prices. This is going to be more of a luxury vehicle. And we know, and one of the reasons why we are cautious on Tesla is that we know all the German luxury guys will be coming with their own EVs over the next 3 years in the 2018 to 2020 timeframe. And that's Mercedes, Audi, Porsche. So competition is intensifying on the luxury side.
Right. So as more companies produce electric vehicles, what does that mean for the auto industry at large?
I mean, it's going to be a very important transformation. So when you think of the automakers, the whole engine is going to be sort of overhauled here. That's going to be a difficult and challenging transformation. At the end of the day, we do think that the return on invested capital for the automakers will actually, be very consistent with what we have today. And I think there's a very important role for the traditional automakers in the future. For the supply base, we highlight some names actually should benefit from this. So we highlighted in our report, Delphi, really has good content. Lear has good content on an EV, more content really than they have on internal combustion engines. So it really could be a positive if you're a well-positioned supplier.
Any idea when Chevy will be making the car more widely available and with less of a focus on California specifically?
I don't have any official news there. I mean, I assume it'll be, ramping production like most vehicles throughout the rest of the year. It only launched in the fall.